those of you who keep some of your money in a savings account, there's a very good chance you're being ripped off. Even after 9 rate hikes from the Federal Reserve over the past few years, the average savings account pays out just 0.1%. I think that's crazy. I know this isn't normally something we talk about on the show, but I need to bring it up because many of you are leaving a lot of money on the table here. Now, last Friday, Jason Zweig wrote a terrific piece for the Wall Street Journal where he laid out a bunch of ways you can get more interest on your money that's just kind of sitting there. He mentions a company called MaxMyInterest, a privately held intelligent cash management service that identifies top savings rates for its customers and automatically shuffles their funds into these higher-yielding accounts. The company says its net yield for investors is 2.38%. That's 228 basis points higher than the national average. Now, that may not sound like much, but if you're sitting on a bunch of cash and savings accounts, that's earning next to nothing. This is a great deal, especially since MaxMyInterest only charges 2 basis points per quarter for its services. I think this is an intriguing story. So let's dig deeper with Gary Zimmerman. He's the founder and CEO of MaxMyInterest to learn more about his innovative service and how you can make sure your bank isn't ripping you off. Mr. Zimmerman, welcome to Mad Money. Great to see you, sir.
Great.
Have a seat. Thanks for coming here, Gary. Now, I've got to tell you, Gary, it's very funny because I read the article like a lot of other people, and I immediately called my personal CFO and I said, what am I getting? I was mortified. I've been doing exactly what is wrong. I hadn't thought to check. I think people got lulled into the idea that you're always going to have low interest rates, and that's no longer the case. And you guys are doing something about it.
Well, this is exactly what happened. If you think about the 10 years since the financial crisis, interest rates have been near zero, and everyone is sort of lulled into the idea that just cash doesn't pay anything. But it turns out it does. In fact, all this time it has yielded something, but most people don't know about it.
Well, a lot of banks, I'm on the conference calls, and some of the great earnings that these banks are getting, and they even reveal it, is that people haven't figured this out. They're making fortunes, but it's time to start helping these people.
Well, it's actually true. About 50% of the profit of the major brokerage firms in their wealth management divisions comes from the spread that they earn on client cash. And so what we want to do is really bring more efficiency and transparency to this market and help people earn more on their idle cash.
All right, so I don't necessarily give you my money. You advise me, I tell you what I have, and then you shift it. I mean, how does the whole process work?
Well, this is actually very simple, and it started during the financial crisis. I was working at one of the large banks, and the bank had a near-death experience, and I said, wait a minute, every dollar above the FDIC insurance limit would leave me as an unsecured creditor. And so I started looking for ways to keep more cash safe. And in the process, I stumbled upon online banks and the fact that they're able to deliver higher yield because they don't have brick and mortar costs.
Right.
So the way that Max works is really simple. You take your existing brick and mortar checking account, you don't have to switch banks, and you link that to a portfolio of higher yielding online savings accounts. And then what Max does is every month we monitor interest rates, and to the extent that we see a higher rate available for you, we simply ask your banks to send funds between your own accounts so you're always earning the highest yield.
Well, I mean, why would the bank want to cooperate?
Well, it's interesting because we originally built this service independent of the banks. We thought that the banks, we really weren't sure how they would feel about it. It turns out that it's actually better for the banks and better for the clients.
Well, why is it better for the banks? It seems to be that your ignorance is their bliss.
Well, there are two different types of banks. So we think of one category you might think of as brick and mortar banks, or we call them relationship banks, right, where you have a checking account, a savings account, mortgage, bill pay, direct deposit. You have a whole relationship. And no one wants to switch banks, and that's perfectly fine, right, but we think we can help them do better with savings. So Max actually anchors that relationship with the core relationship bank. So you're happy to stay there because they're able to serve you all these other things. For the online banks, what we've done is taken away customer acquisition cost. And the typical online bank pays 200 basis points to acquire a customer. And we think of that as basically a tax on the system. Wow. By eliminating customer acquisition costs, the online banks are able to pay higher rates. And in fact, on the Max platform, some of our banks are now delivering preferential yield that is only available through Max because they're able to acquire these customers at no cost.
Okay, so I recently, because I had been aware, we switched. And we switched, I'm not going to mention to who because that's not fair. But it took 3 weeks to switch. And in the interim, my daughter needed some money. And they really weren't able to get it to her. And I'm trying to figure out why that speed is no good, right? It should be much faster.
It should be much faster. And when we started Max, we were stuck with the legacy process of opening an online bank account.
Right.
You go to the website, you type in all of your information, you find a check, you wait 3 days for trial deposits, and we said that's not going to work, that's too slow. So what we engineered is what we believe to be the fastest account opening process in the country. So on our website, our customers can now open a new savings account in 3 clicks and 60 seconds.
Now, recently S&P bought a company I know because of the street we owned it called RateWatch, where they have the highest rates, they tell you, but they haven't integrated it with this. Would that be something? Could I go around the country and find it? I mean, let's say rates keep going up. I want to earn, 3 if I can find 3. If you check it out and it's okay, would you? I mean, it would be natural.
Well, that's the whole point, is all of these deposits are sitting in your own bank accounts, and they're all FDIC insured. So best rate wins. What's interesting is because our customers tend to be fairly large, they end up parceling cash across multiple banks so that it can all be fully insured. And so even the lowest yielding bank on our platform is still attracting average balances per customer that are higher than what they attract on their own when they pay for advertising. So it's really a win-win.
Well, and I read about it, now I hear about it, and candidly, Celine mentioned someone, I know her father, he was my boss at Goldman Sachs. I read it, and I said, I don't know why I didn't do this. I hope I can get my money back from who I gave it to, because this is too smart. I want to thank Gary Zimmerman. He's the CEO of MaxMyInterest. I hope you enjoyed that, and one day maybe the company comes public. This is the kind of company that's working for me. That's what I want. Stick with Cramer.
Great.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.